Thank you so much for joining us here on a Monday morning. I'm Marlon Bowling with you here on the Market Day Report. We're going to be going to the phones now and welcoming our first analyst for the day. It's Dewey Strickler with AgWatch Market Advisors. He is based in Franklin, Kentucky, in the southern part of that state. And Dewey, thanks for joining us here as we open up our trading week. Let's go ahead and take a look at how the grains are opening up in the early going this morning, and wanted to get your comments on it. So let's look at the corn market here first. As the market is now off and running, let's take a look at our corn futures trade. Right now we have the September down just a half cent at 334.5. Now this is interesting. We were actually 2 to 3 higher overnight. December corn now trading a half lower at 341.25. So a little bit of an about face on the open here compared to what we traded overnight. What about the soybean trade? Soybeans were fairly flat overnight. Right now, we're seeing weakness there, too. All of a sudden, we have August soybeans down 8.5 at 9.98, under 10 bucks. September down 8.5. We have November down 8 3/4 at 979.5. So let's look at the wheat trade. Wheat was fairly sharply higher overnight. Still is. September Chicago wheat 7.5 higher at 432 3/4. Let's look at Kansas City, where we have September now 6 1/4 higher at 425 1/4. And in the Minneapolis spring wheat market this morning, September up 1.5 pennies at 496 3/4. So there are the opening prices here, Dewey. Wanted to get your thoughts on this. Why are we seeing that kind of strange market action here in the early going this morning?
Well, it is a little odd here. I'm not surprised with the corn and beans here because the window is beginning to shut here as far as weather being a factor. Here for corn, looks like, we're going to be looking at conditions to be mostly warm here through August the 7th, but we're looking at normal to above normal moisture. Beans, looks like they got some lower here to go. I don't think that this 966 mark on the beans will hold here. Wouldn't be surprised if we don't see the beans try to go down to about 940, 935. These corn looks like has one more leg down to about 3 1/4. The only market that I see is showing to put in maybe a bottom here, and that is the wheat market here. Wheat, we've had the prices went lower here last week, but the momentum indicators did not, and that is a sign of a bottom. Also, too, we're looking at the funds are short 665 million bushels. That's not really far from the record that they set back here in April. So bears, even though fundamentally wheat still looks a little negative, bears better beware here.
Well, the news wires have been talking quite a bit here in the last couple of days about the impact that heavy rains have had on French wheat and also German wheat, really reducing the quality and the production there. They say the wheat futures there in the European Union went up in price about 10% just since Thursday. Big surges there. So that apparently seems to be spilling over and really propping up the U.S. wheat futures. Haven't seen positive news like that for quite a while.
Yes, it has been a while, and I think that is exactly one of the factors in supporting the wheat today. And, of course, bear in mind the funds are extremely short.
Extremely short, right, and they have been that way for quite a while. Just the exact opposite of what we have seen in the soybeans for most of the growing season here so far. So we've been showing a chart here showing the Kansas City hard red winter wheat futures, and you can tell it's been a precipitous drop, and most analysts seem to be agreeing that it's at least due for a bounce, if nothing else. Quick peek at our cotton, and we'll take a little break here, Dewey. On the cotton futures, we'll bring up that new crop December contract. Overnight, it was a little lower, still is, down 69 points at 71.99 per pound, so under 72 cents now. We'll talk about that more during the day. We're going to pause for a break. We'll be back in just a moment. We'll be talking with Dewey Strickler about the livestock market open right after this. Back with you on the Market Day Report. I'm Marlon Bowling with you. We're talking with our very special guest. It's Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky. And Dewey, of course, after the markets all closed up Friday, USDA came out with a slew of livestock-related data in their reports. It included the cattle on feed report and our cold storage report. And in that cattle on feed report that came out, one of those numbers kind of stood out, and that was that placements number, where the trade had just publicly had anticipated a sharply higher placements number. Once again, they're getting used to that. They've seen it for several months in a row. They expected an increase of 6.5% from a year ago. Well, USDA said it was up only 3%. that seems like maybe that would be supportive to the trade. Is it? Let's take a look. Let's go to the live cattle futures here this morning and see how they are doing in the early going. Right now in live cattle, August is, in fact, $1.75 higher at 111.70 per hundredweight. And now we have October up $1.77 at 109.85. Meanwhile, on the feeder cattle side, that would probably be more impacted by that placements number. And yes, it is. August feeders up 285 at 140.05. We have September up 286 at 138.68. In fact, all the contracts all across the board, Dewey, on the feeders are now over $2 higher. Is that kind of the reaction that you expected to see out of that report?
Yeah, really. You know, when you look at the numbers, traders had looked for placements. Well, they were on the very low end of the guesses there. So you gapped a little higher here in your markets this morning. You look at your August feeders, you got a little bit of a double bottom around 134. I mean, yes, we're still in a downtrend. In order to turn the market up, you're going to have to move back above this 146 level. But you know, it looks like things may be starting to turn around a little bit here for these feeders, possibly.
So, of course, you and I have talked about that in the past, where in the recent week or two, they had sold that cattle market off so much. And it seemed like a lot of folks thought maybe by midweek they would have rebounded a bit in that cattle market in advance of that report, but they waited until Friday before they really showed some strong gains in there. It was like at the very last minute, right before the report came out. So I don't know if they really had that much of a chance to even up positions ahead of that report or not. Where do you think they stand now?
Well, you know, we gapped a little bit higher here. I think the report overall was just a little bit friendly. When you look at the discount of the futures to cash in the cattle, that presents a little bit of a bullishness there. Also, cold storage report, even though the numbers were up a little bit above last month, they were down below a year ago. And also, too, your cutout values are the lowest since last December. So you may be starting to see this market move down into an area of value.
If we take a look at our lean hog open here this morning, Dewey, we'll pull up the futures for our viewers at home and our listeners on rural radio. Right now, small gains. August lean hogs up 12. We have October up 25 at 64.15. Not the enthusiasm that we're seeing on the cattle side. Do you think that they'll ride on the coattails of cattle today?
Well, I think they will, but another thing, too, you look at the August contract of hogs here, Marlin, they are at their most oversold level since looking back here about last November here.
All right. Well, Dewey, thanks for weighing in on the futures this morning. Appreciate it very much. Dewey Strickler with AgWatch Market Advisors in Franklin, Kentucky. Great guy to talk to, Janet, if you want some excellent market advice.
All right. Thank you very much, Marlon.